Hi, this is Shelley Kraft coming to you live on SNNLive. We're at the Aegis Capital Healthcare and Tech Conference right here in Las Vegas. I have with me Trey Knippa of ForceField Energy. It's a publicly traded company, FNRG. Trey, welcome to SNNLive.
Thank you very much for having me. It's a delight to be here.
It's good to have you. Let's get right into it. Brief overview, please.
ForceField Energy has managed to come up with a way for companies to do LED conversions. The simple fact of the matter is LED light bulbs use 50 to 80% less energy than normal light bulbs. ForceField Energy has a way they can go to a company, say, listen, we will convert every light bulb you have to LED. We'll retrofit it, you name it, and you have no out-of-pocket expenses. That's huge for municipalities. As you know, municipalities trying to cut costs wherever they can. They don't have big inflated budgets, to say the least. So cost savings is a big deal. ForceField Energy can do that with no out-of-pocket by participating in the cost savings.
We've had ForceField on before. Let's get an update. What's new?
2 big acquisitions and 2 big distribution agreements and new contracts being signed. There was a press release today. What I think is very unique about what's going on with ForceField right now, we've managed to purchase 2 companies, American Lighting on the West Coast and ESCO on the East Coast. Those companies gets ForceField Energy profitable. That's a great thing. The customer list of those companies don't have the balance sheet to offer the financing that ForceField has. So by us acquiring them, we make them more profitable. We give them an avenue to do more and more business, and that's exactly what's happening. We got a contract. There's a press release today of a new contract, and here's where I think some really unique opportunities lie with ForceField. Mexico. There's a law on the books in Mexico. Every commercial building in Mexico has to be converted to LED lighting by 2017. Seems like a pretty fertile hunting ground to me. And we signed a contract there. That press release came out yesterday.
So now let's take a moment and let's talk to the audience about where does the actual revenue derive from? Is it a continuing revenue stream? Because once you change out, it seems like the work's done. How do you earn money off of it after you've changed it over to LED?
So when we sell it, let's call it very simple. When we sell an LED conversion, revenue comes in the door. Well, ForceField can get revenue 2 ways. A, just doing the conversion. The company says, here, no problem, we'll pay you for it. So that would be kind of the single idea. But the companies we're doing business with are not single location places. We're not talking about changing LEDs at a house. We're talking about a company that's got many, many locations. So what are they going to do? They're going to say, hey, let's try it with this location. If it works, let's do a lot more. So existing pipeline business, we call that the organic growth model. That's going to continue. Also, think about that financing deal that I talked about before. If we go to a municipality, if we go to an individual company and say, listen, we're going to pay for this out of pocket, and we're going to participate in the cost savings. That is a revenue stream for ForceField for 5 years. Now, what ForceField can do, we can either take that stream of income, or we can discount it, sell it as a receivable, get all the earnings up front. So for us, it's the organic growth. It is leveraging the relationships by these 2 acquisitions. We're talking about some high-powered companies here. You name it, ExxonMobil, Subway, Quiznos, et cetera, et cetera. These are clearly multi-location places. That's going to be the biggest area for growth for us.
So let me ask you a question. You're talking about Mexico. You're talking about multinational corporations. How can ForceField handle all of that new business?
Because we are not a manufacturing company. Normally you'd say that the ceiling would be, what is your capacity for manufacturing? ForceField goes to the various manufacturers, and this puts us in a very strong position. Number one, it makes our profit margins stay constant. You know, it's not a matter of, oh, we're going to run into our capacity for manufacturing, et cetera, et cetera. So we're only limited by what the market can produce in LEDs by the other manufacturing companies. But the reason that it's powerful is that we can go and cherry pick. We can say this company is better at making high bay lighting for, you know, gymnasiums and big warehouses, things like that. This other company does a better job with bulbs. Then the competition starts. Well, we can get this bulb for this price, make sure the warranty's good, make sure the product's good. We do an inspection ourselves. So that puts us in a strong position. The market
is buying in bulk.
We're buying in bulk, which makes us when we're buying, those economies of scale exist.
So your individual clients, customers could never buy at the prices you are.
How about the two companies we acquired can't buy it at the levels we can buy it? So now you're taking a company that their profit margin was about 30%, and we're increasing their product margin because we're buying bigger.
I'm going to guess there's no reason for you ever to go into manufacturing.
Absolutely not.
So, Trey, ladies and gentlemen, let's get a website for more information on ForceField.
Go to ForceFieldEnergy.com.
Ladies and gentlemen, ForceFieldEnergy.com. It's a publicly traded company, FNRG. This is Trey Knippa of ForceField Energy. I'm Shelley Kraft, SNNLive. We're at the Aegis Capital Healthcare and Tech Conference right here in Las Vegas. Thanks for coming on, man.
Thanks for having me.
Got it.